Another round of layoffs in the tech sector.
Fears of a recession are looming across the country.
It's no surprise that inflation is a big problem, and it affects everybody, disproportionately so middle income and lower income Americans. That's the reason why it's a big deal. Is this a scenario where earnings growth is still at risk, or are we just talking ourselves into a recession?
A brutal week for big tech. Amid an avalanche of layoffs in some sectors of the U.S. job market, particularly across technology, retail, and finance sectors, Google's parent company Alphabet announced that it would cut 12,000 jobs. Today, we are going to look at why financial markets are no longer going along with the bad news is good news principle. Plus, mixed signals about the U.S. labor market as more companies shed thousands of workers. What do these layoffs suggest about the state of the overall industry and market? How will it affect the economy? Does this suggest recession? In this video, Peter Schiff shares his opinion on whether we are in a recession or not. So, stay tuned until the end of the video as he discusses the overall market, economy, inflation, and the Fed. And if you haven't joined our community yet, be sure to hit that subscribe button for more videos on the market and economy. Let's dive into the video now.
Well, maybe we're not. Maybe it's a depression. And that would be the way that they would end up being wrong. But if you remember, the Great Recession started in 2007. But I was doing interviews on popular shows in mid-2008, and they were saying there's no recession. So what happened was all these economists went backwards and revised down all the data, and then they said, okay, I guess we were in recession. They didn't even think a recession was coming. But the fact of the matter is we were actually in one at the time, and they couldn't even see that. And I think this is the same situation today. You know, we actually had negative quarters. The first two quarters were negative. Well, in the fourth quarter, we've had a big fall in the dollar. It hasn't lost all of its gains yet, but I think it will in 2023. But as the dollar weakens, that's also going to push up our trade deficits because it increases the cost of all of our imports. So I think the help that we got in Q3 was a one-off quarter. We may end up with a negative print for Q4, we'll see, but I think we're going to get quite a few negative prints in 2023 as more air comes out of this bubble. And then I think it's going to be very hard for the recession deniers to continue to put a positive spin on this economy. They're going to have to admit that we're in recession. The question is the Fed going to change course as a result of that admission, or is it going to continue with the rate hikes and quantitative tightening making a bad situation worse, which is what it should do. But the question is, will it do that?
It was a busy week for layoffs in corporate America. Tech giants Microsoft and Alphabet both announced they would fire tens of thousands of workers, which is about 5% of each company's global workforce. The job cuts in big tech are literally piling up. Microsoft said it's laying off 10,000 employees, and Amazon started a fresh round of job cuts and what's expected to become the largest workforce reduction in its 28-year history. It all follows recent workforce reductions by Twitter, Meta, Lyft, Salesforce, and other tech companies. Goldman Sachs fired 3,000 employees. Bed Bath & Beyond previously announced in September that they would close 150 stores and cut 20% of its workforce to save money. Twitter layoffs are also not yet done. Elon Musk plans to lay off more people from the company. More than 120,000 tech sector employees were laid off in just the last year. This is coming during a period of slowing growth and fears of a possible recession on the horizon. So, this pruning happening in the tech sector, is that set to happen in other parts of the labor market? I mean, that headline unemployment rate is 3 points at 5%. We still have difficult inflation, and there's still a near record number of job openings that many sectors and many employers want to fill. Many experts claim that we are not in a recession yet. Let's see what Peter Schiff has to say on this.
It's like a duck and quacks like a duck. It's a duck. The last time consumers were this pessimistic, we were in a recession. And now we're in recession. We've been in recession all year. And the recession is going to get much worse now that it's officially begun. And, the Fed is still hiking interest rates. Inflation is still pushing prices higher. So there's no reason for the economy to strengthen. All of the forces that have been pushing the economy down are accelerating and are going to bear even harder on the weakening economy.
On one hand, layoff announcements seem to signal trouble ahead for the labor market. On the other hand, key indicators point to a job market that's chugging along. For one, the unemployment rate is at a historically low 3.5% as of December, suggesting a still tight labor market. But with all these mass layoffs and a slowing economy, Peter Schiff comments that recession is already here. And if things seem to indicate that, then it most probably means it's happening. Let's hear more from him in the next clip. Also, be sure to give a big thumbs up to this video before going ahead.
Yeah, I think the optimism is unfounded. I don't think it's going to be a good year for the stock market. I think there are going to be some stocks that do well. Unfortunately, most Americans don't own those stocks. The ones that they do own are going to go down. The very popular stocks that a lot of people have crowded into during the bubble, these stocks, even though they've come down a lot in 2022, they still have a long way to fall. And I think there's a lot of risk in 2023, not just in the market, but in the economy. Well, I think people are underestimating just how bad the news is going to get. First of all, a lot of people think that inflation is going to come down. It's not. I think the decline is what's transitory. I think we're going to be making new year-over-year highs in inflation before the end of the year. And the recession that everybody denies exists is actually going to get worse. So we're going to have a weaker economy and stronger inflation. And the markets are not expecting that, and neither is the Fed.
Fears of the Federal Reserve's sharp interest rate hikes slowing the economy were fanned by weak retail sales and manufacturing data. The challenging economic environment has dealt a blow to corporate America, with companies such as Microsoft Corporation, Google, and Amazon announcing plans to cut thousands of jobs. With the quarterly reporting season underway, analysts noted that the earnings picture is also looking weak and pointing to a recession. Meanwhile, comments from Federal Reserve officials continue to highlight the disparity between the central bank's estimate of its terminal rate and market expectations. Money market participants, on the other hand, expect the terminal rate at 4.89% by June and have priced in a 25 basis point rate hike from the Fed in February. Let's hear Peter Schiff's opinion on inflation and the Fed. But before jumping ahead, be sure to like and share.
That the markets believed that these rate hikes were going to work, in that they were going to bring down the inflation rate. The Fed said that we're going to return inflation to 2%, and we're going to do whatever it takes to make that happen. But I think as the markets come to terms with reality that despite the rate hikes, inflation is not going down to 2%. In fact, it's more likely to head higher after this, brief dip that we've had. Inflation is here to stay, right? The days of sub 2% or anywhere near 2% inflation are over. We're now going to pay the piper for decades of inflation that central banks have created. And now we're going to have to deal with the consequences. So if we're going to rid the economy of inflation, we have to be prepared for that entire structure to topple. So there's going to be a lot of bankruptcies. There's going to be a lot of losses. There's going to be a lot of unemployment. A lot of things are going to happen. It's not that you have to cause all this to stop inflation. It's just that if you do stop inflation, all this is going to happen, because all of this was the result of inflation. Every time we've had a problem, the Fed's solution has been create more inflation. Well, now the problem is inflation, right? The solution has become the problem, and you can't solve that problem with the same solution. You have to acknowledge that everything you did in the past to solve the problem actually made the problem worse. It just postponed the consequences until the future. And, we've caught up with it, right? We kept kicking the can down the road, and now we've caught up to the can, and there's no more road. So we have to be prepared for the collapse.
Most of last year consisted of the central bank ratcheting up its rhetoric and tightening its policy as inflation kept coming in hot. But with inflation coming down and the economy seemingly slowing, there are plausible pathways in both directions. Maybe this will be a terrible year for the economy and markets, or maybe it won't be so bad. But either way, relationships that broke in 2022 between stocks, Fed policy, inflation, recession, and the real economy may be back. So, how are these mass tech layoffs going to affect the economy? What does the picture of recession in 2023 look like to you? Let me know your thoughts in the comments below. For more videos on crypto, the market, and the economy, be sure to subscribe to my channel. Also, don't forget to give a big thumbs up to this video. I will see you guys in my next video. Adios, and thanks for watching.